Hey everybody. So in this video today, what we're going to do is top 10 list of stocks to watch for next week. Now, a couple of these are going to be very short-term trades, and you're going to have to be like super quick. And others are much longer-term moves that are developing. So I'm going to wind up going through them and some key levels here. There's also a 3X ETF that people have been trading that we're going to go over, and some people might be surprised by it. But the market's dynamic and it changes, but let's just get right into it. So in regards to today, I'm going to also have up the RSI for the whole video, and then I'm going to link RSI video to the end of this so that people can watch that video that we did a while ago. There's some real value in it, and I would strongly recommend that you start looking at how to use it. But let's just jump right into it. So the very first one I want to do is Spotify. And people are going to be looking at this chart and going, it doesn't really look like there's a lot going on here. The bottom line with it is I think we've bottomed, and I'm going to kind of point out why I feel that way. So you see how you undercut this 211 right here? Okay, I'm going to get into these. These are weekly support levels. But see how you undercut that? Now you've gone through that. So the very first thing that you have to do in order to have a confirmed double bottom, and you might want to remember this for the future, is you're going to be able to see this roughly right here, right? You see that wedge right there? Okay, kind of pops out of it over here, but this is really the strength of the move. So you flip that wedge. So the very first thing you need to do for a double bottom is undercut the previous bottom. The previous swing low needs to be undercut. That's transpired. Then you must go over that. That's transpired. Okay, next you break the wedge line. That's transpired. Next is to close above a previous high. And let's zoom in on this. And I do get into this much attention and detail for those that are new. So if we just focus on this one little section, we can see the little battle that's going on here. And for those that watch that other video, the candlestick video, we know that this is what? Right, a doji. We know that it can represent what? Indecision. What do we've got going on here? Indecision. This doji is telling you that you have indecision as well. And as we know that wicks are what? Price rejection. So what's happening here? Whoever was putting the kibosh on the move here is doing the same thing. So in other words, they're making sure that it doesn't go higher. How are they doing that? By selling stock that they have. That's where they want to get out. If you want to get super technical in this one little area, we can just kind of go like this. And you can kind of see how long these people have been around there for, right? We can see that it actually started with the high back here. So by utilizing that, that tells us what we need to flip in order to put a position on to start. What would that do? That would get us back into this gap and get us to 233. And it also gets us above another high, which is really what we're shooting for, right? So let me just put this back to here. And then I'm going to show you this on the weekly. So what we're looking for is roughly two, this is called 228, okay? And then we have to see how we do at 233. My hope is that you flip that and you keep going. Now, let's put the indicators and bells and whistles back in. Since this trajectory has changed, you'll notice one key thing that's going on here for those that have studied that RSI before. See how we're above 50? See how we're not breaking 50? See how you're here? And this is where you were on the RSI. Seeing where you are now on the RSI and where the stock is. Okay, that's a positive divergence. And clearly, while this was going down, what's transpiring? Okay, you're basically bottoming, right? You undercut it as well here, but you're basically a washed out of your RSI, which leads me to believe that we're heading higher. You could also utilize this as we go over that in that RSI video as well. You can see how you've broken this, attempted it, came back down, gone, very similar to what we're seeing up here. But the divergence between being up here at 233 and this RSI being over here is a clear positive divergence that you want to pay attention to. And I'm looking at trying to get in and up in this and stay in it because this might be something long-term that you might want to be in. They have the single largest paid subscription in the world. Not a bad cash cow to be involved with. So this is where you are on the weekly. And I just want to point something out here. And I think this is pertinent. See this 199 level? See how this was resistance here? Okay, what did it become here? It became support. So this level is flipped to me. Okay, so to me, this is major support. So I don't see this happening, and I don't see us breaking. Now, if you broke below this bar, right, 217, you have to be out of the trade. It's just not going to work. And hopefully we can move the stop up quicker than that to something more reasonable. But that's the risk that you have right now. So you're looking for 228 and then a push to 233, and then we're starting to work our way up, right? 240, right? And then you'd be looking to shoot for up here to 277. So that's really what I'm looking for. But this is a much longer term play, and this could take place over, a period of, in my opinion, this could take place over a period of, I don't know, let's just call it, months, multiple months. This is just not going to fly up. So I would say at least 2 to 4 months for something like this to work. There's only 10 names, so we're not doing alphabetical order. I'm just going to do them. So I've been waiting for this to give me some kind of signal that it did actually bottom. And I think we're there. Now, to be super technical, you really don't need to get involved in this until you're over this 33.91 area. I'm not worried about, the 450 points here. 50 points on this stock is absolutely nothing. It's a $3,300 stock. So I'm going to suggest that you consider waiting until you get above this just to confirm 33.91. If you do that, you should be able to get up to this 34.60 fairly quickly and then simply move the stop up, right, to your cost, and then see if the trade plays itself out and see if you can work this gap up. But I think that this is going to wind up trading itself back up, and I think they're going to have a really good quarter coming up. What I do like about this is I do like how this RSI is about to get back over 50. And that is something that I look at, and I really didn't get into that on the the basic video I did on RSI, and I'm going to do another one, but let's just go through this so we're on the same page on what I'm looking at. I'm looking at that trend line breaking. So you see this trend line that's broken? Okay, that's exactly what you want to see. It's already telling you and telegraphing that we're probably going to get up here. This is not a be-all, end-all, but it sure is a higher degree of probability when you see something like this line up. So that's what I'm looking for. We're looking to get to 34.50, and then you're looking to get up here to back to 3600, and then seeing how you do. Now, before I even go to the weekly, because the other part of the trade where people are really going to start adding to it, by the time I get up here, I'm going to be against this wedge line, right? So I'm going to be against this wedge line when I'm in this gap fill, right? Or after this 50-day. Most likely after the 50-day because, right, you can see where I'm going with this. The timing for this that would have to move to get up there is too great. It's not going to move that fast. It never does. And I just want to point this out because I think this is pertinent. Okay, this 50 is your 50-week moving average, and I just want to point out the differentiation in looking at this. See how it rides that, see how it broke it once, and see how we flipped that and did what? Right, we have an outside day in the first green bar that we've had on the week since 1, 2, 3, 4, since we broke down. So I think that's pertinent to know and pay attention to, and I would look at this longer term. So this is a much smaller stock, obviously, BYRN, and I just like what I'm seeing here. It's not ready for prime time, but it's giving us a really quick trigger, and it's giving us a very quick trigger with not that much risk. So essentially, your risk is really this bar and the low of this bar, right, for now. So your risk is really 28.87. So let's just call it 28 3/4 because we all know that we're going to have slippage and maybe hang on to the trade a little bit to make sure that it works and that it's done. So then you have 30.55. Get above that level and I have a $1.75 stop. Now, the reason that that's interesting to me is this, okay? So that means that I could get up and in this, and by the time this breaks out, it's going to get me to $34, $35. So I could be up $3 to $4 on this. We'll call it with slippage. We'll call it $4, right? So I could get up and in this and then see if I flip this level. And maybe I do flip that level. And if I do, then this could go parabolic, and that could keep me in the stock. And I just want to point out, this has been working its way up over and over again, and it's getting a lot of interest. So I understand people were in it last year and they paid $2 for it. This is where we're at now. So, and I just want to point this out because this is very important. Look at the volume, and look at how the volume has just gone straight up. So demand is increasing for this weekly, and that's a weekly a weekly average versus looking at something like this, right? So you can see why looking at different time frames is helpful. Now, with that said, All I'm looking for on this trade is just get above 30.55 on good volume, push to here. Maybe we just take it as a trade, but I'm really looking for it to flip this level and to see the buying increase. And that usually happens on these kinds of trades where you see this kind of volume kick up. When you start seeing this kind of volume kick up on the weekly, breaking through this, and then if you are fortunate enough to break through the top of this, they go parabolic because a lot of people feel that they're going to miss it and the volume comes in, and that's exactly what we're looking for. And that's what we want to see, right? You want to be involved with anything that has volume. I mean, that's really what you're looking for. So I can't stress that enough. You want to see volume and you want to see it increase, and you constantly want to see it over this line. I mean, that's really what you're looking for. So just keep that in mind. That said, let's just keep going. So this is another smaller one, and I already have these lines drawn because I run through about 400 or 500 charts before I even come out and do this. So just kind of FYI. I mean, I run through a lot of charts, volume, and a lot of different screens and scanners. So what I like about this is, see how you have this RSI here? Okay, you see how you're wedged in here, right? This is going to have to make a decision. Now, the reason that I like how this is being wedged in, RSIs don't do this. When they go flat, and this is more advanced, but when RSIs go flat like this, you're setting up for a violent move one way or another, right? The magnitude of this move does not stay like this, okay? No different than when you look at Bollinger Bands and they get tighter and tighter. Eventually, they can only get so tight before they do something. And that's exactly what happened here. That's exactly where we're heading here. So while this might not be ready for prime time, there are a couple moves here that... Here. So look at how you're respecting that trend line, okay? That's really important to look at. Now, you have the respect of this trend line. So really all you're looking for is 14.25 to flip. Here's your stop, 13.40. How did we get there? Okay, that goes us all the way to back to here, right? To that stop and that level. And we can click this off for a minute. You can see that little wedge line right there. And you can see how we rejected it here and here and here, right? Over and over again. And what happened? We flipped that line. What did we flip it to? We flipped it from resistance to support. Very important to understand that. Now, from where you flip, all you're looking for is this. 14.25. Get over that 14.25. Okay, get to 15.50. Right? And then see if you can push up. I mean, that's your first goal, is to get up there. But look at this. This could have massive, in my opinion, pretty massive potential. And I just want to point this out. So this is where the stock has been, right? You've been all the way up here. You're down here now. There's obvious reasons why that's transpired. But let's zoom in on this, okay? What have we been unable to do with this stock? Close above the 200 week, right? We've been unable to do that since this started back here. And that's why I think that this is a much larger move, okay? So since this line broke here in 2016, in 5 years, we have not had one close above that line. What do we have this week? We have a close above that line. It's the first week in 5 years. So it's important. And you see how you kept knocking on the door, bonk, 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 couldn't break it. What'd you do this time? You broke it emphatically. And this RSI is curling up at the same time and wedging in here. You can see it a little cleaner. So that's it. That's the trade. It's a simple one, but the goal is to get up and in it and then see if it can continue that trajectory up, which is substantially higher than anything you're seeing here. So roughly, you're looking at 20 bucks fairly quickly. But you want to get through 14.25. See how you respond to that 1550 level, and you want to use this 1334, 1330 level clearly as just a get me out. You could probably even just use the 21 day if that happens. And the 8's going to cross the 21 day, which is going to give your short-term traders a signal. So this is one that we have in the newsletter, and I think it actually traded up a little bit even after hours. Now you're right around the same. So I have this in the newsletter, and it's a $359 stock. It's called 360. So you are up 1% from where we entered it in the newsletter, but it really is worth noting a couple things, okay? And a lot of people look at RSI and they get, oh, it's above this moving average, it's above this, it's overbought. This means nothing that you're up here, okay? You can stay overbought for years, and it's happened before. So don't think that way. And again, you may want to watch that video. It's worth your time. But what is important here is that this level has flipped. And how do I know that? See how you're testing it, right? Testing it. Gives you this nasty bar that kind of makes you think that it's over. What does it do on Friday? Completely reverses, encapsulates this bar. So we've encapsulated this bar. We know that we have buying coming in because we're seeing how the buying is staying above the 75, right? That is a positive sign for us. So this is getting ready and getting set to go parabolic, in my opinion. And there's another pattern here I want you guys to, and girls, to understand. So when you have a pattern like this and you have a wick, and every week or every day, what are you doing? You're just picking away at what? What are you picking away at? It's almost like a jigsaw puzzle, right? Because wicks are price rejection. So every week, this is just filling in that price rejection over and over again until what? It's gone. Now that that's gone, it's filled up. You're closing at the high. This is ready to go. And for people that, understand what I look at and understand some of the patterns that I try to get people to recommend, to understand is, this went parabolic. On this break, it went parabolic, and now it's tested that line and held, and now we're breaking out a new high. So, you can keep the stop right around where we are before. 345 is really where I would keep the stop. I don't think I'd go all the way down to here. I don't think it's necessary. And if you get a close this week under the 350.64, that would be disconcerting. But you're setting up here, and you're setting up, in my opinion, over the next couple months. I think you're setting up for a solid 100-point move. I think this could really go. So it's definitely one that's on the list. So people are going to find this one a little odd because we've been talking about this for some time. And there was a trade here when it broke out. But the bigger trade is really setting up here. And I just want to point a couple things out. We've already gone through the earnings cycle, so we don't have to worry about that. But what I like here is that a couple things. One, you'll notice how, see where this RSI is? Okay, so the last time this RSI was here, right, we were here. Okay, so I like that. We're getting ready to break this. See how we tested it, failed, came back down, held the 50, tested it, failed, reversed, getting ready to go. Flipping this 39.68 level, let's call it 40, and I believe that's even where you're over, is absolutely huge. On top of that, you essentially encapsulated the entire bar of the previous day, which rejected this line. Now, if I get rid of this, all I'm looking for, and yes, this is very Bitcoin centric. So if Bitcoin falls apart, this will fall apart with it. If I can flip that level, which I think you're going to on Monday or Tuesday, if I can flip that level, I'm heading back up here. I'm heading back up to this level. I think you're going to get back to 57. I think it's going to happen. So I would definitely have this on my watch list. It was really interesting. About 2 weeks ago, we were talking about this one, and Fidelity took a stake in it of about 8%, which I found fascinating that they were buying this at this level. But it seems like they're ramping up the growth, and it looks like this is going to continue. Out of all of them, including Riot, and there's a possibility of that moving as well. But I think that overall you're in a position where this one makes the most sense. I like the base, and I like the action, and I like how these are getting wider and wider apart. So I would just be looking for it to flip that 40.66 level. You'll just be using these levels as your stops. I would use 39.68. If you close below that, I'd be out of it. You shouldn't close below that level. It shouldn't happen. Worst case, use 38.61 if you want to give it more time. But you're really looking for this to get back up in that 57, 58 range. And I think it's very, very doable. So I want to preface this next one with what's going on in the market and what we saw on Friday. So a lot of people know that I was pretty bearish on Friday coming in. And I just want to stress this again. You can have a bias, but you don't have to trade on your bias. So I could think that based upon what had transpired in Afghanistan, what's going on with the virus, Powell speaking, I can have that bias, right, going in. It doesn't mean I act on it. So I act on where the probabilities are and what the charts are telling me that they're doing. And that's how I have to look at it. So this was actually something, the IWM, where I actually shorted the IWM, a small starter position when I started banging my head right against this 50-day, thinking that we were not going to break it. And why did I think that? Because statistically, we were not breaking it. That's not the case. It broke through, and we broke through on above average volume on the IWM. So that leads me to believe a couple things. That leads me to believe that I could possibly break this downward trend line. Now, I just want to point something out. You see this downward trend line right here? Okay. Just look at this for a moment so you can understand where I'm going with this. Okay. So there's your downward trend line, and I'll get into the stock that we're talking about trading in a moment. So in other words, I flipped this level, tested it, bounced off of it, and I went higher. Okay. To me, this is signaling that I'm going to break this level. Okay, that I have the opportunity to break this level, which would mean I have the opportunity for IWM to break out. So for the opportunity for IWM to break out now, okay, and everyone knows that when we were down here, well, not everybody, but people know that when we were down here, I was saying that, you know, buy TNA. Friday, I wasn't so hot on it. This week, I'm hot on it, and I'm just going to explain a little bit more. So you see this little wedge right here? Okay, what haven't you been able to do? You have not been able to get above two levels. What are those two levels? This 21 week and this 8 week. What were you able to do this week on Friday? You were able to get above them. Okay, that's not something that should be overlooked. And it's pretty clear to me if we get rid of this. Okay, so this means that to me, small caps might start being the space. If you flip this 226.89 level and you get above the top of that wick, right, which you did do and then backed off, right? You can see the little wedge here, how you got above it and then backed off. You close above that level in the weekly and you're going to start seeing a lot of buying coming in because that red bar was in charge. So what does that mean for us? It means that we should probably start looking at small cap names, especially if this continues. We should really start looking at them. So let me just squeeze this back down. So that's why I'm going to just kind of walk you through this TNA trade. So as people know from the newsletter that there'll be a free link to the newsletter in here, the free version anyway, in the description. But you see how you're holding here and then you came through, you got through the 200, through the 8, and now you're working your way up. It's really hard to ignore this and the volume. And even though my bias was one way, I was clearly wrong, right? And I'm not really sure why we're seeing everybody pile into the IWM. But that was the trade. And it usually does not have 3% days. But when it does have these kinds of days, it kind of signifies a bottom. I mean, here you are, right? And that's your goal as a trader and investor to look for pattern recognition. So to me, this is setting up to break and to get up to this level. So all I'm looking for out of this is for IWM to get over 227. I then am looking for this to get over 92.60, which is 92.75. If I get over 92.75, okay, I'm shooting for a 101 target from 92.75. Within 90, if I close below 91, you should be out of the trade. Okay, that's the trade in a nutshell. And I like the way it's shaping up. I mean, it's really hard to ignore what's going on there right now. So, you just go with the hand that you're dealt. So this is one that was in last week. And looking at this, you've been wedged in here forever. We're not ready until, and I just want to point this out, we still have yet to close over 68 3/4. We still have yet to get over the 70 level. Okay, so there's no trade until at least one of those two things go. Now I have this duplicated, so I'm going to get rid of one. That's not what I wanted to get rid of. Hold on. Get rid of one of these, and I want to get rid of this. There we go. So, but let's put this back so you can understand. So it's actually good that it's basing. And why is that? Because it's giving us more potential on where this can go to. So breaking through this level, right? The level that we looked at before with this was pre-market. We were looking at that 63 level. And some of us will remember that trade. I remember looking at it last week. And now how you're holding. Look how you're respecting the 8. So to me, this is getting ready to go. We need to see way, way more volume than we're seeing. But we're looking ready to go. I think you get through 70 here. You could be using this actually as your stop if you really wanted to. Right now, as your stop, you're going to have to use that anyway until you see what transpires here. But you're really looking for over 70. Close over 70. Actually, close over 68 3/4, but get over the 70. Like emphatically get over it. and this is probably going to rip right up here. I mean, that's how I see this playing out. And I think it's really important to understand that when you look at this RSI yes, you have the same trajectory, but you can see what direction this wants to head, right? This is kind of almost put an arrow on it, and it can almost telegraph where you're going. And that's what it's doing there. So this is one that people in the community have been playing with, skin. And this is just a very simple trade, but it executed on Friday. And it executed at the close on Friday, frankly. So you see that little wedge right there on skin? See how you closed above this? Here, let's get rid of all the bells and whistles. I know I'm going to leave the fib levels in because they're important for this. So to pick the trajectory on where this is going to go, after you flip a channel, the easiest way to do it is pick the last spike, right? And then just pick like where the swing low was. And then all you're going to do is be able to then kind of get an idea and understanding on where the first move would be. So that's going to take us to about 29 bucks, we'll say, right? That would be your target on this. All I'm looking for out of this is a trade. Okay, could it keep going? Absolutely it can. But I have to think about this from a trade standpoint. So all I'm looking for is to get over 25 and a quarter. And then from there, what I'm looking for is, see the open of this bar? The open of this bar is 24.32. So I would use 24 and a quarter as my stop. Gives me $1, okay, on a $3.5 range. So I'm at $3.5 to 1, and then I get to play it and see if it does break and does go through. So this is a very short-term play that we're just simply trying to play the parabolic move that might happen here. And they're the levels that I would look at. 25 and a quarter with a 24 and a quarter stop, and you're trying to see what it does when it gets to 29, if it's going to push or not. So this is one I'm just going to run through, and I want people to just to understand it. Now, it might be too late. It might not be too late for this, but I just want to point out a couple things here that I think are very pertinent. So a lot of people played this one on Friday, and I want to cover it specifically for that, but I don't think that this is done. So what you saw happen with Sprint and some of the other names like SPRT, I call it Sprint for whatever reason, probably because of what the stock's done. But what I'm interested here, and I'm going to state this, you need to trade this like an option. So you have to understand you could get cut in half, and so that you have to trade accordingly and use your risk parameters when you're doing this. But what I like about this is if you go through this term that's been used, and it's used a lot, gamma squeeze, okay? True gamma squeezes are based upon the fact that someone that is short cannot cover. So once you're through there, they have no way of protecting, right? And essentially, if they're short something, okay, they need delta, which is, you know, the stock in and of itself. I don't want to turn this into an entire option lesson, but you need stock. So let's say I'm short 10,000 shares of this, okay, and it opens right over 7.5, which is the last strike, okay. There is no way for me to protect myself in September, okay. The next target on it is $10, and that's as far as the strikes go out until January 22nd. Now, as the stock goes up, they will increase the strike prices. The problem for them becomes who's taking the other side of that trade. Okay, so all of a sudden the market maker has to start taking more risk. Well, the only way they're going to take more risk is to start driving this up, right? That's the only way that they're going to take more risk, because if the stock's not going higher, so all of a sudden they actually are in a position where the buyers of those calls start accentuating the move. Right? So that's why you'll start seeing that once you're over a certain strike price, you'll start seeing them buy that strike price, because that's going to drive it up even more. Okay? So that can happen here. Now, this was something that we played around with in the community, and we're up in it, obviously. But, you know, you have to think about this. This is nothing more than trading an option. Just like you should be looking at that support when you traded that. When we went through this SPRT, and it's really important that you understand this. Okay, there is no legitimate reason for this stock to go from 13 to 50, right? They didn't reinvent a new world. It's a simple trade, and don't tie yourself to it. So that's why I was saying in that pre-market live call that we had, and if you don't subscribe to these, I'd recommend that you do. You can I saved them so you can review them later. But it's why I was saying when we were at 50, like, I don't know what you're waiting for. It's time to go. Just get out of the stock. And you have these levels, and these are what you need to be using as your support and resistance levels. Now for this, what you need to be using for support and resistance, and you can just see how this is just a darn hockey stick, is understanding that yes, over this 750, yes, you have a true gamma squeeze, not one that people keep referring to with AMC, which is just people buying the stock. That's not a gamma squeeze. If it was, it would move a lot. It would move a lot faster, because you're going to be in a point where these people can't cover their short position. They're not going to be able to use options to cover it unless they're willing to go out further. And the margin requirements, when you go out further, they differentiate depending upon who your broker is. Your broker might not want to wait till December for you to cover this and have to keep increasing your margin and increasing your margin. So that's what happens. That's why the squeezes happen. So the easiest way for you to do this and understand where this can get to is, let's remove all annotations, okay? And let's remove fib. And I save this for the end. So we can't use pre and post, okay? All we can use is whatever the swing low was to where your high was, okay? We're going to just take this out as an anomaly, okay? This is where you're at. To me, this is just a sheer, this move here is just a sheer anomaly, okay? So we're just going to leave it alone. But it's kind of interesting how it just happens to sit here too, isn't it? So we're going to use this as the swing low, and we're going to use this as our swing high, okay? Fits more into the trajectory of the stock and where it's been trading versus this, again, and I'll use the word anomaly. So you try to take out the anomalies. We can overlay them and say that, yes, you could probably get up to here. But so all I'm looking for out of this move to start with, right, is to start looking at these levels. 702, 763, 860, okay? Because these are the levels that everybody is going to be looking at. Why? Because you have no other frame of reference here, right? There's no other frame of reference that you can use here. So let me pull this down, and you can start seeing the other levels. So 768 roughly was a level. Let me just show you this very quickly. Where did you stop? 767. Okay, I'm not the only one looking at this. I'm not the only one doing this. It's not magic, right? So other people are looking at these levels that are institutional traders and knowing, well, that's a fib level. We could stop there, okay? So, and I know this is a little bit of a long lesson for the top 10 video, but I think it's really important for you to understand the nuances on how people trade and what real traders that are institutional are looking at. And maybe it'll make you trade a little differently. So you see how you're looking at these levels. So what's the next one that I want to see on Monday? Next one I'll be looking for is this, 866. I'll be looking for how you do on this 945 level. Then I'll be looking at 11. Then I'll be looking for 12, right? The 1278. So that's it in a nutshell. Now, if you're looking to trade this, you're going to have to be using very early looking at charts, and you're going to have to use 1 minute, 5 minute, 15 minute setups in order to get involved with it. And really, you have to just start using these fib levels like 768 as your stop. If you start seeing that 708, 750 is going to be a key area for this as well. But you're going to have to use shorter term time frame charts to try to get in and up this. And then your goal is to just move your stop up as fast as possible, reduce your risk, right? So that you can hold a portion of it. And maybe we do see a SPRT type of move in this, but I do think that is a possibility, so it should definitely be on your radar. So that's it for the top 10. I hope that was helpful. As always, please comment. Let me know which of these you like the most.